What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down why tomorrow is going to be a very important day for the stock market for Tesla, as we have some important data coming out. We have the debt ceiling limits being reached, and we also have important earnings and Fed speakers all in one day. So I'm going to basically divide this video into like three parts. The first part is going to be about today, what happened in the markets. The second part is going to be about tomorrow, why it's going to be so big and how this could affect Tesla. And then finally, the last part is going to be about the data for Tesla and what I do anticipate for tomorrow for the stock. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 13 days, so check it out before they run out. With that out of the way, let's get on with the video. Tesla's down 2% for the day. It did hold the level I was talking about, that's around this 127 zone. However, despite the fact that Tesla's still in these like higher levels compared to when it was at like 100, despite that, it is still not looking great. It still looks like it's going to start heading down. The whole market looks that way. The trend is still looking more bearish. But despite that, even if we get a bit of a rebound tomorrow, there's some important things you have to remember about the next few weeks, tomorrow specifically, that could still cause a big downturn in this market. So let's first talk about today. What happened today? Well, I told you guys I expected Tesla to make a move to 135 to 136. That is where Tesla went to in the very beginning. The market pumped, right? Tesla pumped to the upside. And we would have continued pumping. We could have held up, but then there was a big change in plans by the Fed. They ended up saying some very important things, and that caused the big drop. But why did the market pump in the very beginning? Why did SPY kind of like gap up a bit? Why did Tesla also push up a bit? The answer is because of the fact that, firstly, we had some earnings that came out and also some economic data. For the earnings side, it was not good in my opinion. Now, we actually saw Charles Schwab miss a little bit on earnings per share, but basically make it on revenue. But we saw PNC miss even by a bigger margin on the earnings per share and actually beat on revenue. So we got some misses here and there. And then when it comes to the economic data, I mentioned PPI was coming out. As you guys know, we actually did well on PPI. We beat month over month, we beat year over year. So that's a sign that inflation is cooling off. But these numbers are still much higher than the 2% target of the Fed. So don't forget that. So yes, the market started to pump off the fact that inflation is lowering off some, even though earnings did not really affect us. But then all of a sudden, the Fed speakers came, and this happened to be around the time that SPY was near 400 per share. Tesla at this time was near the 135-ish area. Then Tesla started dumping with SPY. All right. What happened? Well, the Fed came out and they said, oh, we have more rate hikes to come for 2023. Then we had Mester come out and say the job is not done, inflation is still way too high, people have to be a lot more patient, and they're not necessarily pausing yet. They made it very clear they're not pivoting yet. So if you want to call this rally that we saw a Fed is bluffing rally, you could call it that. But I want to be clear, the Fed is not bluffing. They still have work to be done. Bullard came out and he started talking about how the Fed still has to keep rates rising at a rapid pace. The Fed cannot become complacent because you have to remember the effects that other countries could have on the US's inflationary numbers. You also have to remember the fact that in the US, if the Fed starts to like pause too early or they start to pivot too early, it could lead to something very similar that happened in the 1970s. That's why the Fed is going to likely keep rates high for a while. And he also suggested a half point hike or 50 basis point hike is still possible. So the market just panicked when they heard this. And he isn't wrong for saying that. It is what it is. They made it clear they're going to raise the terminal rate above 5%. The market did not like to hear that. The stock market dumped off this news. Tesla got dragged down from 136 all the way down to 127. And overall, it does look to, in my opinion, that Tesla is going to start coming down with the market on a downtrend. We could rebound a little bit tomorrow, but if Tesla does rebound and we kind of like get stopped around this like 130, 131 area, then you have a potential head and shoulders that could be forming, and we do have this gap down here. If Tesla ends up breaking below 125.74 to 125.75 or whatever, around this area, we're going to likely fill the gap and come down pretty hard. But the thing about Tesla is it's not crashing as hard as it would before because of the fact that earnings is pretty close by. And some people are still trying to buy into it and hold it, including like Kathy Wood. But until then, how it moves tomorrow is going to be very dependent on data and other pieces of information. And although the charts look bearish, do want to note that tomorrow is going to be very important. So let's talk about tomorrow. Why is tomorrow so huge? I actually listed five of the biggest things. This is obviously is not every single thing, but these are the five big things. We have the debt ceiling limit being reached. Why is this important? It's because of the fact that in a divided Congress, there are going to be some very, very big negotiations that have to be made. And in 2011, when this happened amidst a crisis, because the market was still recovering from the 2008 crisis in 2011, it took them many months to come to a consensus. And on top of that, the stock market ended up dropping 20 plus percent. So it was very hard in 2011 when this happened. I'm not saying it has to be a repeat of that, but this could lead to some fear. Look at the headlines coming out already. 4 ways around the debt ceiling crisis. People are already calling it the debt ceiling crisis. It's a crisis. It's not good. It's leading people to panic. The US may default on their debt, which they won't, but I'm just putting it out there. Panic comes when you see headlines like this to the US credit markets. This is something we should not overlook. We should consider this because this could lead to the market underperforming, including Tesla. The second thing that's worth noting is the fact that we have some pre market earnings. They're not going to be as huge. I have my charts, my numbers here. The pre market earnings include a couple of banks. They're not really like that massive, but it is worth noting that it could give us an idea of what is to come in the stock market and future earnings as well. Then, on top of that, we have jobless claims coming out. This is important. This could move the whole market because the data is going to come out. It's going to come out tomorrow before the market opens. We have jobless claims data. The consensus is at about 214,000. We're hoping we get something above what we want, these numbers, the expectations, because we want pain in the jobs market. Because if the jobs market is too strong, the Fed has to be even more hawkish. Don't forget that. If you want inflation to come down even harder, if you want the Fed to slow down or increase the odds of the Fed slowing down the rate at which they increase rates and then pause quicker, we need pain in the jobs market. We need clear pain. So far, we're not seeing it, but this could change quickly. So we want this number to be high. If it's lower than expected, the market could actually not open at the best of places. It's coming out an hour before the market opens. The jobless claims data. Make sure you look that up. You try to find it. It's going to be very important. So those are already three big things coming out. What else is there? We have a bunch of Fed speakers during the market hours. So I actually have some of the times right here. Some things from the pre-market, market hours, and after close. During the market hours, more Fed speakers are coming. This is important because we have Brainerd coming from the Fed. And if they're super hawkish again, it may not be the best for the stock market. Be very careful. When they speak, the market can make unexpected moves. But at the same time, Brainerd is notorious for not being as hawkish, but I don't really think she's going to be dovish this time. The Fed has a lot of work to be done. And the last thing, last but not least, we have a big dog. We have Netflix. They're going to be announcing their earnings. And this is going to give us a good idea of what may end up coming to the future companies because Tesla has earnings going into next week. We have other big ones as well. It's very important to know this. Netflix could actually shake the markets. It did last time. So please be wary of this. After the market closes, Netflix has earnings. So we have so much coming out tomorrow. It's going to be a huge day. And I do expect lots of volatility. So now that I went over both today and tomorrow, let's talk about the future. So far for Tesla, high volume, 194 million, especially during the very beginning of the day when Tesla did pump a bit before the big sell off. I am noticing that we had a relatively high short volume percentage. It should have come down once the data updates. It's going to come down. We might get a big bounce, which is a sign that shorts could pile right back in. I also want to note that for Tesla, let me just find this data. For the short interest, I noticed that's been on a bit of an uptrend, starting to uptrend a bit. This might start to spike at these higher levels if Tesla starts dropping even harder. So please be very careful. Tesla does have an advantage over the market, and that's the fact that it has earnings coming up in about a week from now at the time I'm recording this. So it may not crash as hard as it would have, but it still can still come down. I just want to make that clear. I want to note that I guess this seasonality data technically does not matter because we have so many catalysts. Jeffries came out, the analyst, and they are giving Tesla a buy rating. B of A Securities is also giving Tesla a neutral rating. So we are seeing some analysts with some positive outlooks. Kathy Wood has actually increased her buying into Tesla. I think they actually increased the buying by like 15 million or something like that. So they're still buying into it while selling some of their other Chinese EV stakes from I think it was like Xbong and Neo. So that is a pretty decent sign, but it does not necessarily guarantee anything. So what's like going on in the charts now? Let's focus on the charts. On the daily, SPY doesn't look too good. If you look at this, look at what the chart looks like. We got this like inverse head and shoulders that formed off 374. We got this pump. I mentioned this. And my target on SPY, my initial target was 398 to 402, but I adjusted it if we did break above 400 to about 402 to 406 being the peak before we get a big reversal. And I mentioned to you guys, I've been saying this for a very long time. I expect a big reversal in the markets to come down eventually, because I would look at some other very important indicators out there. Look at the MACD, for instance, and our RSI. There was a clear divergence that formed right over here, especially on the RSI. So now the market is showing signs that it's getting ready to reverse with a very bearish looking daily candle. I believe that what's very likely to happen is this is going to continue on this trend, but it's not going to just like flat out crash unless we get some really bad data tomorrow. We could actually see this come down pretty hard. But SPY is entering a very critical level, and that's this gap area right here. That's around 390. So there is a chance SPY could try to bounce off like 390 because it is quite oversold. Bounce a little bit, but I don't expect it to retest this trend line. That would be very surprising. I think people are very scared and panic is going to reemerge in the markets. I believe we're going to come down, fill the gap very early in the morning when the market opens. It also depends on the data and other things like that. And then we could get a small rebound, but it might be very weak because the Fed speakers are coming and they might drag this thing right back down. And eventually, as the days go on, I see this thing breaking below 390, coming all the way back down to the 380s and just continuing to drop going into February and March. I'm very bearish for those months. I made that very clear. I also want to note that for the NASDAQ, I've been calling for a head and shoulders that looks like this. To form the right shoulder, we had to come to this level. And that's exactly where it came to. We actually filled our gap. I was talking about this and I mentioned, okay, if we fill that gap, I'm going to turn bearish on the NASDAQ. That is what happened. It just started selling off a little bit more than I expected and a little bit faster. I do believe the Nasdaq might try to bounce a little bit, but slowly but surely it's going to start downtrending. Then it's going to start crashing as we approach February, in my opinion. This is what the charts are suggesting. I also mentioned the bearish divergence and other factors like that, the hidden bearish divergence on both the Nasdaq and SPY. On the QQQ, my target was 285. And then I mentioned that we could actually see this thing fill the gap before a big rejection. We went to about 284.69, then we started to come down. If it keeps this downtrend going, it could be because of Apple and also because of Tesla. Apple, it's still very close to this supply zone, but like Tesla, we do have a possible head and shoulders forming. We might have a left shoulder here, a head here. Maybe tomorrow we come down, we get a small rebound, and then the Fed speakers come, they eat this right up. The market starts to take a bit of a hit. Apple comes down, bringing SPY down. Tesla comes down as well. That's what it's starting to look like to me. Excuse me, sorry guys. The 10-year treasury yield, we have all these gaps up here. We actually broke below 34, but like I said in my previous videos, the debt ceiling could cause this to actually make a big rebound, and we could start filling these gaps to the upside, which would lead to more selling pressure in the stock market. The dollar index is actually up. It actually hit my 101 to 100 target. I do believe it's going to make a very, very nice move to the upside over the next few months. And I do believe that's going to be very negative for the stock market. Finally, as the stock market does show more volatility and starts coming down, I expect the VIX to continue pushing. It may have bottomed right here and might continue to push up and start heading up to this 21 level, going into the 22.64. That's a very key level for the VIX. And slowly, I expect it as we approach like February going into March, I expect this thing to get to the higher 20s. I expect a big move to the upside for the VIX, which would be bearish, or I'm sorry, it's going to be correlated with the bearish market. You have to remember that this is not the determining factor. I want to make that clear, but it is correlated with the market inversely. So what I'm seeing now for Tesla is I do believe SPY is going to come down a little bit into open. I do believe this is going to drag Tesla down a little bit into open. Okay. And let me use the 5-minute time frame when I draw out what could end up happening. I want to talk about some key levels. Okay. If Tesla could break and hold 130, there's not a whole lot of upside for it to go to. I don't see it getting pumped up that hard. But right now, this 130-ish level is going to act as resistance, 130.5 around there. Now, if Tesla does pump up to this level, there's always the risk of that head and shoulders like formation I'm talking about. This could be the head, this could be a left shoulder, this could be a right shoulder, and it could come right back down. If you are a bear, you have to watch this 125 level very carefully. The 125 zone, if it breaks below 125, if it breaks below 125 point, exactly 125 actually, technically. So right about here, we break 125. This thing's going to come crashing down to the very low 20s pretty quickly. It could happen in just one day. All right, so I'm warning everyone. Yes, Tesla is holding up a lot better than before as of right now because of earnings, and it's not like down, 10% or 8%. But in my opinion, it is going to likely get dragged down if the market does start to drop even more and more and more players in the game end up capitulating. And to me, this setup looks pretty bearish. It would take a very big breakout for me to change my mind. I'm not really seeing that. It looks more bearish than bullish. For tomorrow, if I can make a prediction, it's looking like this. Let me first talk about the key levels, and I'm going to talk about my prediction. Just remember, 127 is support. Break below that, then you have this 125 area. If it breaks 125, it's going to come crashing down to about 120 pretty fast. But if it pushes up 130, it's about 131.5-ish. That's going to be some resistance. I don't see Tesla breaking much higher than that unless the whole market gets a small bounce. But even if it does, I don't see us like holding these levels for much longer. I think we're going to temporarily hold these levels before we start to come down and start filling some of these gaps. That's just my opinion. The main thing I tend to get not always perfectly, is timing. Sometimes things take a little bit longer, sometimes they happen a little bit faster with a stock like this. For tomorrow, I think we're going to come down into open. There's going to be some panic, some fear. Tesla might come down to 125. The support there is actually pretty nice, though. And I'm thinking that maybe this is during the time that SPY crashes to about 390, and SPY might get a bounce, so may the NASDAQ. Some buyers might try to defend their positions and drag the market up. So maybe Tesla comes back up just like this, and then Tesla comes all the way back to this 130.7 ish area, maybe tries to hit 131. And we kind of form, like I mentioned, we have the left shoulder here that formed right here. We have the head right here. And then we have the potential right shoulder that's forming. And then slowly, let's just say the Fed becomes really hawkish. The Fed starts saying very hawkish things. Let's say doesn't do so well in earnings later on. Let's just say, there are more layoffs coming out from like Microsoft and companies like that. And I actually have an article here. There have been a lot of layoffs, guys. It's getting worse and worse. And the pain is really starting. It's just getting started. Elon Musk said, what we're about to go through is going to be comparable to that of 2009. He believes a big or a mild, not mild, maybe like a moderate to moderately high recession is coming. And I actually agree with him. I think we're in for some pain. I really want the best for everyone. Then I see Tesla potentially slowly coming back down and breaking below 125. And soon, I don't know about tomorrow or perhaps within the next couple of days, if we do get that break below 125, we could come and start filling the gap down here. Okay? And 120 is going to be some pretty decent support. Just please watch these levels carefully. And if the market keeps downtrending, Tesla could get dragged all the way back down to like the 115 zone. I'm not too worried about that because right now we're just talking about this gap area. That's going to be some very, very important support. So, with that said, I want to thank you all so much for listening. Please be ready. I expect lots of volatility. Tomorrow is going to be a crazy big day. And just as a reminder, please remember each and every single one of these major market moving events, from the debt ceiling limit being met. There are going to be lots of big headlines. We have some pre-market earnings. We have jobless claims coming out during the pre-market. This is very important data. It will move the market to some degree. Then throughout the day, we have Fed speakers, and finally, Netflix earnings after the close. All of these things are very important to remember. I want to prepare you in advance for the volatility that is yet to come that will affect Tesla and the collective market. Thank you for listening. I gave you guys my prediction. I want the best for everyone. And I also want to remind you Tesla is still a fundamentally strong company. I'm still very, very bullish long term. For the short term, though, there is going to likely be some pain, just as Elon Musk warned everyone. Thank you. Tesla to the moon, because the long term future is still incredibly bright. And peace out.